Hi guys, and welcome back. So there are some things that are happening behind the scenes over these last couple days that throw up red flags for me as an investor. And I didn't get a chance to shed light on this on the live stream, so I'm here right now for you. Let's talk about it. So first, Jerome Powell. Jerome Powell comes out and he tells you that we're in an AI bubble, which mainstream has taken over and said, yes, we're here. The unfortunate part is you're going to keep pushing it by lowering rates. Yesterday, the Fed agreed to lower the rates another 0.25%. And it's not, that doesn't mean much to the everyday American. What it means for the world and for the sake of risk is that it gets cheaper. If risk was expensive, then people would actually take caution when investing. And they're not going to take caution when we're dropping rates. You're telling corporate America that although there is risk, it's not on me. And I'll tell you why. Because the VIX is down, means no volatility on this market. Everyone's getting valuations based off of cap expenditures. Cap expenditures are not profits. I want to put that out there. So when it's business to business and you're giving valuation based off of how much another company is investing into you, those are not profits, guys. Those are just investments on depreciating assets. These chips, for example, and or the technology that it takes to produce these chips, and even the energy. But I saw the Koreans and what they said. They said they're sitting out this one. They're not going to take, they're not running after AI the way everyone else is trying to stay ahead of it. If you go back to the dot-com bubble and you start looking at all the companies that built the infrastructure of the dot-com bubble, whether it be fiber optics and or laying down the Cat 5 and going through the whole thing, the infrastructure you see that we currently use today, believe it or not, those companies don't exist. They don't. We've managed to shift to the winners. And right now on the internet side, you have Meta, you have Google, Amazon, Nvidia. And Nvidia comes out and they do an earnings report and they say, hey, we have $30 billion worth of orders for chips. And I don't think people know what that number means, 30 billion. But to have that as a long liability conversion, what I mean by long liability is it's a receivable, but it's not here yet. So you can't count it as profit, like in common accounting terms. And when you do that, when you start doing mark-to-market accounting on dollars that you haven't gotten, and yet you're getting awarded valuations, and you're able to prop up the companies that are investing into you, this is a recipe for the disaster that happens. But it's not going to happen at the ultimate level, because when you think about the grand scheme of it all I have to do if I'm Nvidia is I just have to sell some shares at these valuations and find some investors to get into it, and I'm clear. Remember, Nvidia is a $5 trillion company with $10 billion cash. And I'm ballparking the number. I'm not even close to it. It might be even less than that. So when they make an announcement, they're going to put $1 billion into Nokia, they're putting in 1/10 of their cash. Because until they start selling their portfolio, they don't have anything. It's a great game of smoke and mirrors. And eventually, the naysayers are going to hold their hands up and say, I told you so. I told you this was a bubble. I told you this is smoke. But Jerome Powell spoke out of both sides of his mouth yesterday when he said, we're in a bubble, this is the caution. And then he agreed to give them an easier way to do it by saying here, free money. And that meant a lot to me, because when I'm looking at a euphoric market, like everyone's just excited and up and to the right, and they can't go wrong. You can't pick a wrong stock, and you're going to miss out on this AI investment, and so give us money. There's people out here that are investing money for themselves and for investors, but it's their job. So they're trying to perform and take money off the table. But what happens when you can't take the money off the table? Because you're using it as leverage or collateral, like all the real reasons, right? But when I look at this market, I think the same thing. I say, okay, while it's all moving up and to the right, show me the things that are not moving with it. Show me the things that are not moving with it, and let me go get that value. And right now, the best value on the market is a GameStop share. There's a company called GameStop, if you guys are not following. They make a profit close to $500 million a year. They have almost $10 billion cash, if not more, by the end of this year. They'll have almost up towards $11 billion. So yes, more cash than Nvidia, but those little mistakes that Nvidia makes and these investments they make, nobody notices because they're so big, they're so massive. But eventually something's going to crumble, something's going to crack, and you don't want to be a part of it. So when you look at things like GameStop, they're sitting back, they're sitting on their hands, they're not spending the money, they're not using it for all the right reasons. Then you go and look at Warren Buffett. Warren Buffett's doing the same thing. So, hey, why are the two smartest guys in the room not spending any money? And excuse me as I drive into the sun, it's very bright. But the two smartest guys in the room are not spending any money. And why are we not mimicking that as a whole damn union, as a nation? Because there's real greed in the streets. I like the fact that GameStop doesn't move with the market, because they're not the market. And you don't want to be this market. There's so many signs of a bubble, so many signs of a crash. And I know there's going to be winners, and I know AI is going to be built and it's going to be great, whatever, for some people, some way. But like I told you, the guys who invented the internet, they don't exist. And it's the same thing. It's the same thing. It's rinse and repeat. A lot of similarities here. So I'll believe in this market, and I'll believe in investing into those emerging technologies when it's not so risky. And it's not risky. Do you guys understand what I'm telling you? Investing into AI is not risky yet. And that's because they're making it this way. By keeping the markets the way they are. They're leveraged for AI. Their interest rates are leveraged for AI. You name it, it's there. And when that happens, when you get to throw all caution to the wind, because hey, we can't lose, that's when you need to start respecting it. That's when you need to be like, hey, it's not my first time on a motorcycle, but I need to treat it that way. Have some real caution, guys. Me, bought more GameStop today. It came down to $22.80, and I'm happy about that. And I'm just going to keep buying what I buy. You do whatever you need to do. It's GameStop. Can't stop, won't stop, GameStop. Educate yourself, guys, on investing and markets. And I'm going to tell something to the CPAs of the world, to all these dudes out there that like to tell you they're smarter than you. The smartest argument is the negative argument. When you say something and someone gets to go, you're wrong because of this, it makes them seem smart. And it's hard for you to sell it to someone. It's hard for you to say why GameStop's so great in the past, because there's these arguments that are backed by numbers and what they would call facts. But when you're really in it and you really understand it, there's no amount of misinformation that's going to throw you off. So, no one can present to me a bearish stance on GameStop. The only thing you can say is, well, I don't trust the management team. Well, then don't. But the numbers speak for themselves. And they're forever up and to the right. GameStop, can't stop, won't stop, GameStop. Everything else, millionaires, remember, be cautious. Peace.